So this video here is going to be for Ross. Ross wanted to know, what am I doing with my MAGS position, and kind of, am I going to gain income from it? Am I just looking for growth? What is the idea? So for all of you who don't know, MAGS is it's the Roundhill ETF that holds the MAGS 7. It's a great ETF. It's a great product, it really is. And so the other day I was thinking about my beta, and I will tell you what beta is in a second. It's one of the Greeks. And my beta is my relative sensitivity to the underlier. So I'll explain to you what that means. If your underlier, I got my whiteboard. If my underlier goes, say, like this, right? And this is the SPY or SPX. You can't actually buy SPX because it's European. So you can't actually buy it, but it tracks the S&P 500. SPY is just the ETF version of the S&P 500. But if that grows at 10%, this is your base, okay? So beta is your relative. So if this is, say, the S&P 500, beta measures your relative sensitivity against the S&P 500, okay? So we're gonna go over some beta numbers. Of the most popular ETFs, I'm gonna pause this and I'm gonna write them all down. Otherwise it'll just take me forever. All right, here we go. It might be backwards on your page, so I apologize. So we got MAGS, this is by Roundhill, XDTE, Roundhill, QQQ, this is the indices, which is, we got, I think it's BlackRock is SPY and QQQ, XPay, this is Roundhill, and then at the bottom here we have SPYI, that is NEOS, QQQM. I actually don't remember who makes this. This is the 1 year performance on every single one of these. So MAGS focuses on the MAG 7, 38.78% in 1 year, XDTE, and these are with dividends reinvested, okay? 12.49, okay? QQQ, 27.41, XPay is 16.52, SPYI, 16.19, and QQQM, 27.47. This is the 1 year return. XPay is I think XPay is a little bit off. I think it's actually supposed to be a little bit higher. I'm not sure if it's been actually an exact year. It's like 2 days ago it was an exact year. So I guess it's pretty accurate. Now, beta measures your relative sensitivity to the underlier. So if SPY, right, which is the S&P 500, moves up and down, right, it fluctuates like this, okay? That means because the beta is higher than 1, it's like a 1-to-1 ratio, it's a higher to 1, MAGS would have more of a deviation against the underlier, okay? That means that you can buy in lower down here, you can sell higher up here, whatever you want to do. XDTE, however, I think this is actually misleading because two sites gave me, it says 0.89 or 1.03, and that's a pretty wide variance. Because it is a covered call fund, every time it goes down, any sort of covered call fund has 100% a beta to the underlier, meaning that it falls. So if SPY, right, falls by, I don't know, 2%, XDTE would thusly fall by 2%. But if SPY goes up by 4%, XDTE is going to get capped at a certain percent. It might only go up 1.5%, right? So the numbers they give you for the beta aren't exactly accurate. QQQ, it trades the Qs. 27.41%. That's a nice return. That's a really good return. That means you're doubling your money like every 3.5 years. It has a relative beta of 1.17. XPay 16.52. That trades, covered calls on the SPY. That's its actual underlier is SPY, but it trades covered calls a couple months in advance, pays a standard dividend. All of these are great products, by the way. I don't want to steer anyone away from that. They're great products. And it basically follows the SPY for a while. SPYI, another great product. Now this one's interesting. SPYI has a fantastic return. It's reliable, and it doesn't fall as much. It has a lower, so with a sensitivity of, if it was 1, that means it would be beta is it's like a 1-to-1 ratio. Okay, it's a ratio measure. SPYI has a ratio measure of 0.71, meaning that if if MAGS is going crazy like this, and the index, the S&P 500 is going, pretty standard up and down, it's about 20% annually. It goes up and down and moves. Okay, but it always goes up and to the right. SPYI is smaller deviations. Doesn't go up as much. Also doesn't lose as much. So like during the whole tariff thing with Trump, it was like the best performing asset to have because it didn't fall as much. It's actually great. A lot of people love it. It's a fantastic product. I love it. Okay, QQQM. I've never actually owned this, but it was the only one that even came remotely close as far as MAGS total return. So, oh wow, that didn't save. That really sucks. Okay, so yeah, so if you were to do MAGS in 10 years, you'd have about 10 million bucks. If it was just you put in 200 grand and you let it sit and it compounds at an annual rate of 38.78, it's going to compound into about a little over 5 million bucks. Okay. If you had bought during the April downturn, it fell hard, fell significant. If you had bought during that time, you'd be up close to like 50% right now. It's pretty spectacular. Why am I buying this? One, because it works as like a savings account. I can borrow against it tax-free forever. And I'm also doing covered calls on this. So I take a small percentage of my portfolio. Right now I have 2 covered calls on it, which will expire tomorrow. They are going to get called away, which is fine. I'll probably make maybe $2,500 in 2 weeks time with those 2 options. So it's 200 shares. 2 contracts equals 200 shares. Every 1 contract, it's equal to 100 shares. Okay. I also have, the other day I bought 2,300 shares of the MAGS. On, how many did I do? I did 10. I did 10 more covered calls on them, and I generated, I don't know, something like, it was like $1,500 in a couple seconds of just selling the covered calls. Now, the benefit of the covered calls, and I'll show you guys here. Say the price right now is, $65, and I set it for $70. As long as it stays below $70, right? I keep my shares, and I keep the premium. I get to keep this, and then I just get to do it again and again and again and again. If it goes above this line, it sells automatically, right? It closes, and I get to sell it for 70. My cost basis is it's like 64 and some change. Okay, so I make the difference between those 2 numbers, the $6 difference, on 1,000 shares, plus I get premium. Okay, it's a really nice profit. I do this every 2 weeks, and I just keep on rotating them over and over and over again. until they get